Spot trading or options trading. Is it better for you to buy the asset at a low price and sell it at a higher price? Or is it better for you to trade options? Which trading method is better? This is what we're going to be talking about in today's video. So welcome back to another video. Which one makes more sense? Let's say you buy Bitcoin, you hold it all the way to 70K, or you buy a call and you hold it all the way to 70K. Which one makes more sense to you? Well, before I go into that, comment down below. Which way do you think is better? Is it better to trade spot or to trade options? If one over the other, why? I want to know the answers before we start the video. So after the video, you can come down and comment again if you believe what I said made sense or not. What is the pro of spot trading? Well, spot trading is fairly simple. There is nothing to think about it. You buy Bitcoin and you hold Bitcoin. Once Bitcoin is profitable, you sell Bitcoin. It is the simplest thing that you can do. So it is just buy, hold, sell, profit. As simple as that. Another thing is that you have immediate ownership of the asset. So again, you buy Bitcoin, you are the owner of that Bitcoin, especially if you have it in a wallet and not in a centralized exchange. So if you have Bitcoin in your wallet, your crypto wallet, you have Bitcoin, you, the viewer, you own that Bitcoin. Again, this is why in crypto we say not your keys, not your coins, because if you don't have ownership of the wallet where you are buying this crypto into, again, with a centralized exchange, if they go bankrupt, if they pull a Gemini or one of these other places that failed, and they can go bankrupt and get your money and they can get your crypto. Of course, you have to go to court, file and fight for you to get back these assets. But most of the time, these assets are gone if something happens to the exchange. This does not apply for your wallet. If you have crypto in your wallet, that's yours, unless you're stupid enough to lose the seed phrase or to lose the access to the wallet, then by any means, this is your crypto. And the third thing is that there's no expiration. You can just buy and hold it for 135 years. You can ask your children, your grandchildren to close the position, to sell your Bitcoin for profit. So there is no expiration. You can just hold them indefinitely, whenever, for as many years, decades, centuries that you want. But what is the con of having spot trading? What is the con of holding a spot asset and trying to trade with the spot asset? Well, it is full market exposure. You would know most likely someone that does spot trading for meme coins, for altcoins. So they buy it at very low market cap and they rally it all the way to, let's say, 100x for that token. This is fun and nice, but what if it goes the other way around? Let's say people who bought Doge right at the hype and then they had to see it go down because of market exposure. You could see that go down all the way to less than a cent, less than 0.001 cents. So that sucks and that hurts. So when you hold the underlying asset, when you hold spot, you are there for all the market conditions. So up, down, sideways, doesn't matter. And also it can be capital intensive. Let's say you want to buy a full Bitcoin. Right now it is over $63,000. Of course, you can buy one Dogecoin with fractions of a dollar, but you can see that if you want to actually trade, if you want to actually do spot trading, it requires a lot of money to make a lot of money. So it is capital intensive. And you have limited strategic options. What are the two things that you can do when spot trading? If you're not leveraged, you can short, so you can bet if the underlying is going down, or you can long, meaning that you can buy and you hold until reaches a certain point and then you sell. So honestly, you can just hold the asset. You can just buy and hold. If you're shorting, you can yes, short spot today, but why would you do that with no leverage, with no anything else? Just too capital intensive. So you're basically there to buy low and sell high, which kind of limits you a lot. This is where options trading come in. So with options, you have a lot of things going for you. You have risk management because you know how much you can lose, how much you can make. You have leverage, which amplifies your return if you compare that to spot trading. You can profit in a lot of market conditions. So the strategic outcome that you can have is way better than just buying low and selling high with spot trading. And as more in-depth that you get with understanding advanced strategies, the more money you can make in pretty much every condition that you can get into. So sideways market, low IV, high IV, bullish, bearish, whatever's thrown at you, if you get in-depth into understanding options, you can profit out of it. So let's say you want to open a spot position for Bitcoin. You buy it at $63,000 and you sell that at $70,000. That is 11% that you make out of this position. So if you have $10,000, you're gonna make 11%. So you're gonna make $1,100, $1,100. This is just by doing this strategy, just by spot trading. You bought low and you sold high. Now, what if you want to do that with options? Well, you can do that with just buying a call, or you can do that by opening a spread, a vertical spread. If you don't know what a spread is, you can check out this video right here where we explain spreads. We have a couple of videos explaining spreads, vertical spreads, how to do spreads with the topics, but we made it very simple. We made it very, very simple. So you believe, just like you did for spot, that it will go above 70K. You believe that. So you go right here on the topics and you believe that by May 10th, it will be above 70K. Guess what? With this strategy right here, you can make 787%, meaning that if you were to put these $10,000 here, you would have made $78,000. A good strategy is, instead of using $10,000 like the example that I gave you, you use $1,000. So instead of making $78,000, you put $1,000 in collateral and you make $7,800, which is still way more than what you would have made with just spot trading. So this gives you the flexibility or the ability to lose some trades before you're profitable, because instead of putting the whole 10K as collateral, you can split it in smaller parts, even hundreds by hundreds, 1,000 by thousands, whatever fits or suits you best. So even if you get 3 or 4 wins out of the 10 tries that you do, what can happen is, if you're getting 700%, 500%, 200%, if you're getting a huge ROI like in the example that we gave you, all of these losses will be meaningless because the wins are going to cover for all your losses, which would not have been possible if you were just in the red from spot trading, because it is not fragmented. So all the $10,000 are already the collateral. You're already holding $10,000 and the value can fluctuate up or down. So that gives options a lot more flexibility, you know, a lot more wiggle room for you to be profitable by reducing the size of each trade, or by also changing strategy for each trade that you do, instead of just trading spot and waiting for it to go in your favor. And something that could happen as well for spot trading is that the direction might be going in your favor, and then at one point it just flips and starts to go down because of some news or something. And then what you're left with is you have to close the position, maybe take some losses or some profit, and then open another position, a short position if you're spot trading and you want to go short now because the market's down. But with options, you can just go for windows of time. So you have an expiration in 1 week because you believe in 1 week it will go up, but then after 2 weeks it will go down. Then you can go for a bullish strategy in the first week, and then a bearish strategy for the next week, and so on and so forth. So options gives you that wiggle room, like we said. So what are the cons for options? We just mentioned they are beautiful, they're the best way for you to do your thing, you know. What are the cons? Well, the first one, as I said, is complexity. Again, as I explained in another video, complex does not mean hard. Something that is hard can be just one step, and that step be very, very hard to execute. One step be very, very hard to execute, because there's a lot of things that you need to know to make that step works. Complexity means that it can be a multitude of smaller pieces that you can build to make up something. So complexity is just a lot of little things that you need to understand, for options in this case, a lot of little things that you need to understand. But when you understand, you look at the bigger picture and you see that it is not that hard. So something that is complex not necessarily is hard. And this is where people get scared, because there's a lot of variables, a lot of things for you to understand with options. But once you do, at the end of the day, it is not that hard. So it is a con, but it is a con that you can get over it very, very fast. The amount of time that you have to dedicate is not as much as you would to become a very profitable day trader. You know, you would need way less, just a little bit of patience, a little bit of work that you can study and become very, very good at options. Another con is time decay, especially for buying options like we just saw with the example with the vertical spreads, or just buying vanilla options. Well, there's time decay. So time eats away the premium of your option. And if you're buying or if you're longing, that can be scary, because even if you get direction and volatility right, if you made a bad decision, theta, time decay, is going to eat away your profits. So you don't want to do that. This is why you need to understand how this Greek works. And premium cost. But premium cost, as we just saw, premium cost, you can mitigate that with spreads. You can mitigate that by buying a call and selling a call, or buying a put and selling a put. This will limit your maximum profit, but it will also reduce a lot your premium costs. So you will need less capital to make more money. So at the end of the day, you have to compare. One offers you flexibility, one offers you the underlying asset. So you're actually holding the underlying asset. You're holding Bitcoin, you're holding Ethereum, you're holding whatever asset that you have. Also strategy. If for you the strategy is just buy and hold, you don't need options. You just buy and hold the asset and be happy. The risks versus reward is also way more favorable towards options because again, the capital, even if you lose a lot of times back to back, the capital that you can use to make that money back, to be more profitable than just spot trading, just by holding, is way less. So the fraction of money that you would need to make back what you lost is way less than just buying and holding a position, waiting that it will go up and become profitable in the future. And again, market profitability. If you stay 2 years in a bear market with Bitcoin, you're not going to make any money out of it. You're just going to see the USD value of your Bitcoin decrease. With options, even if you have the underlying asset, even if you have Bitcoin, you can hedge against that. So you can make passive income to buy more Bitcoin at a lower price. So you can kind of DCA with options because you're selling options, collecting premium, selling options, collecting premium, buying more Bitcoin, and you can do that with options even when things are going down. So to conclude, which strategy does make more sense? I see a lot of people that just want to do spot trading, and that's fine. That's fine for you to buy and hold the asset. I'm not here to say bad things on spot traders or holders. I'm not, because I also hold a lot of positions on things that I don't necessarily want options to be involved with. But I'm just showing you, if you are one of these people, that there is a way to be more profitable than just holding. And if you didn't know, now you know. So I hope this video was insightful. And if you did, comment down below what was the first token or coin that you bought when you joined crypto space. Well, for me, the first 3 that I bought back in 2017, I think it was, were Monero, Bitcoin, and Ethereum. So what was yours? I want to see it down below in the comments. So I hope you enjoyed. Don't forget to like, subscribe, and turn on notification. And I'll catch you guys in the next video. Peace out.